a lesson on CRT, as promised, candle range theory. This is not going to be something for you guys looking for some type of holy grail or some spoon-fed type of garbage. This is going to be an in-depth guide for the ones who want to learn more, the ones who are dedicated. Literally everything you need to know about CRT will be in this video. Now, if you want to learn more, I suggest heading over to Romeo's channel or Sham. Let's get into it. The CRT concept itself, the theory itself, is what helped me design my 9am CR model. So I've been getting a lot of comments telling me, you're just preaching what Romeo states and what he says and teaches. I am not. The 9am CR model is based around the power of 3 and CRT, as well as the open, high, low, and close. However, it is a specific model designed on time. This right here is a CRT. We have the first candle forming the range, the high and the low. The second candle manipulating below, wicking turtle soup. And the third candle distributing higher, where? To the range high. So what is CRT? CRT stands for candle range theory. CRT usually presents as a 3-candle model, but it's not always going to be a 3-candle model. Usually it will be, but it won't always be. It's not restricted to 3 candles. All right? For example, right here you can see multiple candles used in order to hit the range high. So we formed a range inside bar, turtle soup the low, heading all the way to the high of the range. As I say right here, there's 2 types of CRT models that can form. The 3-candle model, which everybody is used to. If you're not, please watch my previous videos. And a newer model, CRT plus inside bar. This is a lot more high probability. So if you're looking for high probability setups and you want to skip and filter out everything else, focus on the CRT plus inside bar setups. What's a CRT plus inside bar? As I explained before, this setup right here. All this means is that there's more than 3 candles in order for one end of the range to be hit and the other end of the range to be hit. Multiple candles will form inside of the CRT range. What is the range, guys? The range is the first candle. And what's the difference between a CRT plus inside bar and a 3-candle CRT? The difference is it takes longer to form. As I said before, it's higher probability and better for people who wait for confirmation, or better suitable for beginners. Here are a bunch of examples of CRT. I've been getting a lot of comments in my previous videos of how I should include more examples. Right here you can see range formed, turtle soup, heading all the way to the opposing end of the range. Same thing happened here. Turtle soup, heading to opposing end of range. Same thing. Range formed, inside bar. So this is a CRT plus inside bar. Turtle soup the low, heading all the way towards the opposing end of the range. Here is a perfect 3-candle model. Range formed, accumulation, manipulation, distribution, power of 3. Same thing happened in this one. We formed a range, inside bar, turtle soup, Where are we heading? The opposing end of the range. It's pretty straightforward, pretty simple. This is going to change everything in your trading. Everything changes from here on out. CRT is mechanical. It's a signature in the code. The code of what? The code of the markets. So ICT teaches us to understand that there is an algorithm controlling these markets. Every single algorithm has a code. Within that code, you can look for specific signatures that repeat. And this is exactly what CRT is. It is a mechanical signature within the algorithm's code. The highs and lows are mechanical. They are all predetermined. Of every single week, every month, every week, every day. Every candlestick's high and low is predetermined. There will always be a predetermined high and low and a predetermined objective, always a fixed objective. You can combine CRT with any concepts. All concepts can be combined with CRT. However, using the power of 3 and turtle soup will give the highest probable trades. Always. Here's an example of CRT on the lower time frame. Right here, we have the range low and range high. Turtle soup, the range low, breaking above, forming an order block. We close above the order block. That is the change in state of delivery, the CSD. This is our entry point. Coming up, partials taken at the midpoint of the range always. Why? Because the midpoint of the range, or EQ of the range, is where reversals or continuations can happen. Turtle soups are highly probable at the EQ of the range. Write that down. If you only focus on taking trades targeting the midpoint of the range, your win rate will be a lot higher. As you can see right here, we hit the midpoint of the range. We came all the way back down. OTE entry, hit the order block once again, heading all the way to the opposing end of the range. This right here was a 7.4 RR trade. This is what CRT allows you to do. So, just a reminder, this lesson is going to sound very repetitive, especially if you've watched my previous videos on the 9 a.m. CR model, which is primarily based on CRT. So, you guys need to stay with me here. There's going to be a lot more released in this video. The concepts were lightly touched upon in the previous videos, but there's a lot more to share. Keep in mind that the repetition is what creates the strongest traders. Repeating, practicing, studying, backtesting, front testing, this is what's going to define you as a trader. This is going to be what separates you from the beginners to the professionals. Beginners to the professionals. Right here, we have a CRT high and low. The high and low of this candlestick right here. We souped the range low. Pause the video and tell me what's going to happen next. For all of you who did not pause the video, you guys are doing yourself the wrong. You need to listen and focus. Pause the video and tell me what will happen next. All right. Clearly, this was a turtle soup. So what happens with a 3-candle CRT? We form the range high and low. We turtle soup a low, and we hit the range high with the 3rd candle. If we do not close below a candlestick, this is bullish. If we wick below a low, bullish. Candles are ranges. Every single candle is a range on every single time frame, whether it be the monthly, the weekly, the daily, the 4 hour, the 1 hour, 15 minute, 1 minute. Every single candle is a range. Time is fractal. You need to understand that a daily chart is a higher time frame for a 4 hour. A 4 hour is a higher time frame for the 1 hour and 15 minute. A 1 minute is a higher time frame for the seconds chart. Time is fractal. Therefore, every single timed range is fractal as well. Every single candle is a range. Ranges can either be turtle souped or broken and retested. Every candle has a high and low. So open, high, low, and close, or open, low, high, and close. This means on a lower time frame, you will have a range, a specific timed range. This is very important. Some candles are more high probability than others. These are the specific times of day that you need to be looking for. To determine the higher time frame bias, look to see if a higher time frame candle has been turtle souped or not. This is the key to bias. Do not force it. It'll be very obvious when it's time to enter. So, for example, right here, we wicked above the candle's high. This is bearish. We did not close. Same thing here, wick below, bullish. We did not close. Same thing here, wick below, bullish. This is the most important thing to understand. A close above a candle's high is bullish. A wick above a candle's high is bearish. Vice versa if you're bullish. So a wick below a candle's low is bullish, and a close below a candle's low is bearish. The power of three, also known as AMD, accumulation, manipulation, distribution. The power of three represents 3 stages of price delivery. Once again, accumulation, manipulation, and distribution. Each stage has its own specific function, as I just mentioned before. Use the power of 3 to your advantage. By combining it is going to be distribution, the highest probable trades. The power of 3 occurs in every single candle as time is fractal in nature. There's going to be a range in every single candle. This is crucial to understand. This is a prime example of the power of 3. We accumulate. What are we accumulating? Sell side and buy side liquidity. Sweep sell side liquidity, hitting a key level, manipulating, turtle soup, and distributing higher. So here's another example. We form a range high and low. We wick above the high. What's going to happen next? Pause the video and tell me what's going to happen next. So let's review this. The first candle drew the range, accumulation. Second candle wicked above the high, bearish. We wicked above, we did not close above. Turtle soup, manipulation. Third candle must be distribution. Distributing where? To the opposing end of the range. So let's look at that example on the lower time frame. This is candle 1, the gray shaded region. Candle 2 is the red shaded region. And now where would be the entry? Focus. First off, we're bearish. There's your hint. We souped the range high. Where's your entry short? Here is the order block that forms. How did it form? How is it validated? If we close below. So with this candle right here, we closed below the order block. We reached into the order block. Once again, this is your entry, and you're shorting to where the midpoint of the range and then the opposing end. Third candle, distribution. If you're trading the third candle only, the third candle opens, rises above, entry above, third candles open within the order block, and short. Turtle soup and change in state of delivery. A candle can either be broken out of or a wick above is bearish, a wick below is bullish. A close above is bullish and a close below is bearish. Sometimes you're going to see candle number 1 and then multiple inside bars. Eventually, one end of the range will be souped or even broken, but the soup is more likely to occur if an inside bar forms. If bullish, we wait for the next candles open and then we manipulate below into a higher time frame PD array or a key level. This is the turtle soup. The key level is from the higher time frame of a specific power of 3 that you are trying to capture. Vice versa when bearish. If you are bearish after a candle has been souped, the third candle is what you should focus on. When the third candle opens, you must look for a sell opportunity above its opening price. Vice versa when bullish. So when you're bullish, your entry model must be below the open. The change in state of delivery, CSD. This is basically key to mastering the order block entry. If you want to master turtle soup without entering on the turtle soup, use the change in state of delivery. The last up close candle in a bullish leg turning bearish and the last down close candle in a bearish leg turning bullish is the change in state of delivery. These are key factors to if your turtle soup will end up working out or not. For example, a thick, heavy down close candle tapping a key level. As soon as we close above it, we should now remain above it. This will be your order block as well as your change in state of delivery. So look what happened. We closed above, you could have entered. We rallied, we came back down, you could have entered once again, and we rallied again. Stop loss where? The bottom of the order block or the swing low. Once again, turtle soup, key level hit. Thick up close candle, bearish order block. We closed below. That's the change in state of delivery. Tapping the order block again. Entry short, bang. So remember, the last down close candle is going to be your change in state of delivery when bullish. Thick and heavy down close candle, and vice versa when bullish. When looking for a bearish order block. There's two types of CRT, the 3 candle CRT and the CRT plus inside bar. So, a lot of you guys may be confused. What is a CRT range and what is a typical range? So a CRT should be very, very obvious. It should not be hard to spot. For example, right here on the left, you're going to see a typical range. No true CRTs are forming in this range, as you can clearly see. On the right, for example, we have a CRT range. Thick candle forming, the range. Inside bar, turtle souping the low, heading all the way to the CRT high. Guys, this is an inside CRT. So there's a CRT and a CRT within the CRT. Pay attention to that. More examples for you guys. Typical ranges, no CRTs available. Typical range, no CRT. And then CRTs. So we form a range high and low. Turtle soup the high, targeting the range low. This example, we form a range high and low. We turtle soup the low. We wicked below. So this is bullish, targeting the opposing end of the range. Same thing here. Formed a range high and low. Turtle souping the low. Bullish, targeting the opposing end of the range. So do you guys see how the CRT ranges are very, very easy to see compared to a typical range? Focus on trading CRT ranges. Filter out your trades. So as I said, there was two types of CRT, a 3 candle and an inside bar plus CRT. The 3 candle CRT, as many of you are familiar with, is simply 3 candles: accumulation, manipulation, distribution. Power of 3 at its finest. The first candle is going to form the range. We wait for the close. Mark out the high and the low. This is a specific timed range, not random, a specific time of day. A second candle will form, souping or breaking the high. This is a turtle soup. This is going to be where you're going to find the most advanced entries. On the third candle, we're going to see the quickest and highest probability trades. This is the distribution leg. So this is going to be where the beginners should focus. It's going to be a quick, fast, and heavy price action filled candle. When you're bearish, you want to sell above the third candle's open. Look for your entry models above the open of the third candle if you're bearish. And if you're bullish, you want to buy below the open of the third candle. Look for all your entries below the third candle's open if you're bullish. Here's an example of that CRT on a lower time frame. First candle forms. Second candle forms, souping the first candle's range high. Third candle forms, order block right here, thick up close candle, touching the key level. Change in state of delivery. Third candle open, above the high of the third candle. When we're bearish, we want to look for entry models. Order block is above the third candle's open. Sell in here, short to the opposing end of the range. For those of you who follow ICT, this is a unicorn entry. Those of you looking for OTE, as you can see, we hit the order block as soon as we closed below. So we closed below the order block, we tapped in it right here. This is your order block entry, and the ones looking for OTE would enter right here. Where are you targeting? The opposing end of the range. How funny is it that the fib, one of the first deviation of the Fibonacci, aligns perfectly with the CRT low? It must be random. It must be random. Hopping on to the 1 hour time frame. We can now refine the entry by looking for a lower time frame CRT. The CRT low and CRT high of the higher time frame is coming from the 4 hour. We drop down to the 1 hour and look for our lower time frame CRT, which is performing right here. Hopping down to the 15-minute time frame, deeper look. Let's refine that entry. Candle open. Turtle souping the low. When we're bullish, we want to buy below the open. So what open is this? This is the candle right after the one that hit the key level on the 4 hour time frame. So as you can see right here, we hit the key level, range low, open of this candle. That is this shaded region right here. Since we are bullish, as we wicked below the range low, we want to be buying below this range low, which just so happens to be aligned with the lower time frame CRT, which is exactly where this turtle soup takes place. Entry long, targeting the opposing end of the CRT range. Let's dive down to a 5-minute chart. The candle opens. We soup the range low on the 1 hour time frame. Sorry, we soup the 1 hour range low on the 5-minute chart. We wait for the candle to open, as mentioned before. Buy below the open. Entry long. Targeting where? The opposing end of the higher time frame range. Of course, take your partials at the equilibrium. If you study this the way you are intended to, all you will ever need is 3 candles. This is the turning point in your entire trading career. There are specific candles that you need to focus on. We must understand which candles to pick. Which candles will have the highest probability. It is not random. You do not go on your chart and choose any random candle and trade CRT with any random candle range. No. Define the range that you want to trade. Are you a swing trader, day trader, scalper? What range do you want to trade? A monthly chart, so a monthly range, a weekly range, a daily range, a 4-hour range, a 1-hour range, etc. Time is fractal. Choose a range. Whatever range you want to trade, you must be looking for the power of 3. There is always an open, high, low, and close, or open, low, high, and close on every single candle. This means that the power of 3 will always be there. When people are trading profitably, not using the power of 3, they are basically using the power of 3 without knowing it. So looking deeper, if you're going to use the monthly range, focus on the 4-hour chart. If you're going to use the weekly range, focus on the 1 hour. If you're going to use the daily range, focus on the 15-minute. If you're going to use the 4-hour, focus on the 5-minute. If you're going to use the 1 hour, focus on the 1 minute. And if you'll use the 15-minute, use the 15-second. I do not recommend. This is not for entries. This is simply for looking for the power of 3. Accumulation, manipulation, and distribution.